Alright, good morning everybody. Welcome back to episode 10 of the 100K Ftmo Challenge live stream. I want to start the day off by going through yesterday's losing trade, and we'll show you exactly why I was wrong and offside. I started off early this morning doing some physical exercise and just kind of reworking my, not reworking, but focusing on my daily routine and doing some journaling about the things that keep coming up for me. Particularly for me is impatience. So if you can't tell already, I'm a scalper, somewhat impatient. I change my mind very often. It's definitely not for everybody, and I get it wrong sometimes. So I want to thank you for sticking around. A lot of people just see somebody lose once and dip out. Although yesterday was pretty shitty, considering that we basically tried the long the top of the day, and then we took our max loss for the day and ended up having to watch price run away from us for over 170 pips. That was painful, not gonna lie. But today's a new day, and we'll just see what we get here. We should have some sort of standard delivery, nothing too crazy. I am gonna be somewhat cautious. There's no news releases. However, we had, well, we could consider it to be a large range day. We had that yesterday. So as ICT mentions, the next morning session could be somewhat uneventful, and afternoon is where it moves. Let's just see if that's the case today. And if I remove all this on the daily chart, you can see we've got a daily low sitting here. So that's an obvious sell side liquidity target. And then we've got the Friday's NFP low here, which wasn't quite taken out. There is a chance we could run all the way back up so I'm going to be aware of that, you know, because let's just go to this swing low here. We've gone down past the EQ of this range created by FOMC and dipped into a discount a little bit. However, if you look at this here, this is these three candles are one daily order block, and the EQ of that order block is sitting around 11,664 ish. I went ahead and threw some Asian range and CBDR and flout projections on last Thursday's Asian range. And if I think we were meaning to do that last time, yesterday. If I had done that, I think I would have seen the obvious downside confluences here. Like if you notice this overlap between the CBDR, the flout in particular, that definitely would have given me an indication that we might have been wrong on our bias. And then if we go in and we look here, let me just take these off here. If we go in and look at where we were wrong, one of the things I look out for in particular right before equity open is I'm looking for any 1 hour fair value gap sitting above or below price, and then how it's treated from there, how it treats those gaps. And if you'll notice this fellow right here. So here was midnight last night, weekly open. Here's the equity open. I'm going to remove this so you guys can see how that wicked up. See, there you go. This hourly fair value gap here, if I had left that on the chart, would have been a pretty clear indication to me that we were flipping that. If you notice, we came right back up to the premium, so came down, right back up. I don't think ICT calls that rebalanced. Rebalanced, I believe, would be down, up, down, and then the direction. I think this was just redelivered. Although we do, well, that didn't touch the discount line, but it got pretty damn close. This right here. Regardless, anyways, it would have shown us pretty clearly that we were wrong on the bias for the day. And that's equity open. This candle, this hourly candle's equity open right here. And let's see here. We go to the 15-minute. Equity open punched up into a 15-minute fair value gap here. And buy side had already been taken just barely right here. If you can see that, we took all this. But not that. We formed those equal low, or excuse me, equal highs. So that kind of threw me off as well. But then here on equity open, you've got it sweeping the 7:30 a.m. candle, which I should have paid attention to. And I think also there may have been some SMT divergence. So if we take a look here, let's go to the split screen and pop on over to ES or SPX. Hope you guys could see that. So SPX or ES just fell right off the map, and we got on NASDAQ we got something different than that. Let's go to the hourly. Equity open, right about there. Yeah, so not really the clearest. And I wouldn't technically call that SMT, but this was a leader and it started falling without going back up. But here you go right there, this candle right back up into this order block, which is technically this one right here. Also overlapping with the premium of this 1 hour fair value gap. That's been, the price has been delivered in both directions. And then a third direction one last time. This is where, right here is where we were covering our loss by, or actually we're just entering the additional positions, allowing for a 3% total max loss for the day. This is where we made our money back. We tried to buy again here, and it just shit on us for the day. I ended the live stream and I had to watch it go short for, you know, over 170 pips. That was super painful. One thing that I also noticed is that, you know, even though I knew there was news coming up and I'd taken that lesson 2 or 3 times already, I still went ahead and wanted to enter because, you know, we did see a valid setup on the 1 minute. There was that. So just a confluence of factors adding up together to make for a pretty rough day. And we were completely offside. I know a lot of people actually saw this coming short. I think I would have as well, if not for this confirmation bias that I fell subject to, which is I just was adamant and just trying to force the idea onto the market, which is never a good idea, that we were going to come up and hit this daily SIBI. Like, we had just been flirting with this thing for weeks and weeks and weeks and weeks, and we got so close to it. I mean, almost within 100 points of it prior to yesterday's move. But now we're so close down to the NFP low. If we're not doing a optimal trade entry, here, I'll show you here. Hope you guys can see that. Okay, so if we're not doing an optimal trade entry move here to go back up, which is probably not the likeliest of moves, then we will, or we should be, continuing down to attack at least yesterday's low and this low over here. And these zones that I have marked out right here, here, and here were the most obvious crossovers for flout and CBDR. And as you can see, resting right below these nearly equal lows, we have this zone down here that was a confluence zone. I'm going to go ahead and take this one off since we've already played around in that. But yeah, that would bring us down past NFP low to clear out the liquidity that's resting below there, which seems super likely today. And then also on the daily, if we pop over to the daily, and then remove everything. The EQ, or the halfway point of this order block, we're already digging into it. We've dug into it a couple times. We've got sell side liquidity in the form of daily lows resting right above it. The EQ is sitting right around 661, 663-ish. So it is right there. And that's about 150 points away from where price is currently. The daily range has shrunk a little bit, so the average daily range is somewhere around 270 or 250, which leads me to believe that we'll probably get there. And considering if Tuesday was to be the high of the week, it would have a long way to go up. I mean, we would have to go, well, Actually, not that bad, really. About 170 points up. And again, that's still possible. We could see today, we could see the reaction out of this order block. So those are the things I'm looking for. I don't really hold a clear bias, obviously, on the day. Just when we're in the middle of all this, it could go either way. ICT says that when you get close to equilibrium, and that's where we are on this dealing range here, that, you know, it basically is a 50-50 chance. Just wherever the most liquidity is built up on either side is where it's going to go. So that's what we're looking out for today. I'm going to go ahead and do some pre-equity markups, and let's see what we can pull off today. Okay, so while these are the obvious targets for the day, we've got to be pretty careful. Potentially, there's an IOFED for the time being on the 4 hour to go short from this 4 hour SIBI. But the SIBIs, unlike the FEGs, they like to get filled, at least to consequent encroachment, and most of the time they like to get filled. The dollar also looks like it could go down some more. Well, potentially not, because look at that reaction. And that's already done a CE on the 4 hour. Okay, it's nice to see. Alright, so in that case, we could see this just be, we could come up one more time, sweep that and then dip, or we could leave this alone and just dump from here. Either way, that looks good for us to go touch and, or at least tag this previous daily low, which is currently 66 points away from price right now. Definitely doable. What I'm also seeing here is the Asian range liquidity has been taken. We almost got there in London, if you see. And then both London and Asian range, these nearly equal highs, were taken early pre-New York session. And then we've got this 7:30, 8:30 Eastern Time New York Open area right here. So I wouldn't be surprised to see it come up one more time and then dip, or the alternative is that we just dump straight from here and we may not even get an entry, right? We've got this low resistance liquidity run here. This is what over here, this is what I thought would be the LR, and it looks like that's already played out. But we may be having a repeat of that here. So let's just see what happens. Got about 6 minutes to equity open, so we're about to find out. On the 5 minute, we've come up into this fair value gap. So we've got buy side taken, break in market structure here. Yeah, we may have missed the entry already. I like the way this looks for downside. We're above midnight open, so a lot of things are lining up for us. If we can get a pop up on equity open, I may decide to short there. I don't want to take a close proximity entry since we're so far away. That would not be good. Although our 25 pip or point stop loss would put us pretty close to where we need to be. If you notice here on the 5 minute, here's the top of that fair value gap. Your stop would want to be here or here if you were to short. Let's go ahead and show this here. As we saw yesterday too, it didn't really need to pop up above much liquidity. It just barely tapped the buy side liquidity before dumping. So we could get a repeat of that. I'm going to go ahead and call that taken. And then we'll put the 5 minute on the big chart. I think it's pretty obvious what it wants to do from here, but let's just wait for equity open. Throw the 1 minute. Still up 5.4% for the day, or for the challenge, I mean, which is, it's not as good as where we were, but it's decent. We can work with that. Yeah, it looks like it's going to stream downwards. Could potentially get something like that. Want to be careful about a reversal here, so I'm watching that pretty close. Actually, it looks like that was an opportunity right here to pyramid into the position, but again, I'm not going to try to push my edge because it's December. We're in the middle of the week and there's no news or economic drivers. Went ahead and reduced my stop to under 1% risk. So that puts us right at the top of this breaker area. And if all goes well, we should see some pretty quick movement down to tag this low. So in normal conditions, we had a pretty good opportunity here and a close proximity entry again on this fair value gap. I don't know if you guys can see it right there. That would be a nice place to pyramid. And we've got about, say, 20 points to our first target. Something that we could see also is just a return back up to the breaker, which, you know, I wouldn't like to see that, but it is what it is. We've got a pretty comfortable stop here, risking less than 1%, and it's at the top of the breaker, so we'll just see what happens. Okay, so yeah, our only position that we have on is that's what we're looking to do with it. I don't think we'd quite get back up to our original equity balance of 8,300, but we get pretty damn close. Let's just go see what that looks like on Ftmo. Well, yeah, actually, we'd be up, maybe $50 with the spread. So that would be nice to see. We'd get right back up to where we were, and then we can find one good trade or two good trades for the week after this, and that would put us at passing the challenge. So that'd be nice. Now it could stall. Here's one thing that could happen too, since we just swept yesterday's low. Typically that's pretty strong reaction. You would see it come all the way back up here. I mean, even above this sometimes, and it would dick around for a while during lunch and then maybe continue for the day. That happens all the time. The other case would just be that we continue for the real targets down here right away. Not as likely, but it's definitely possible. So we're expecting it to play around here a little bit. Although I would say this target is so close to this target, and you normally see 10 to 20 pips down below to take that liquidity into the liquidity pool. So I guess that makes it a little bit more probable, which is kind of what we're seeing right now. Be super honest with you guys, I regret not taking a bigger position on this, but considering we had a large range day yesterday and we were moving pretty early on like a continuation FEG, I just did what my plan says to, so that's just all I can do basically. This is nice to see. Went ahead and took partials here, and in fact, yeah, I think what I'd like to do is take more actually before we start retracing upwards. I'm cool with that. And in fact, I'm going to go ahead and close out everything here. We could still stream downwards from this little continuation, but that's okay. It's better safe than sorry. And we got pretty damn close to getting back all of our equity. Let's see what that is. So we're about $600 away from our highest equity balance. And we basically had it ran straight for our TP. We got close enough to it. We got within like 30 points. We've swept the previous day's low. We've just swept NFP low. So I expect it, and again, we had a large range day yesterday, so I expect it to do some wild retracements back and forth during lunch. If I'm wrong, obviously it's just going to shit from this continuation gap here. Well, there you go, look at that. Which is okay with me, I'm fine with that. We made up most of our loss for the day. I tend to think it's going to come back up and dig at least into one of these fair value gaps and potentially up into here, this little 30-second order block. That's just what I've seen most often. A lot of people would be shorting right here, and you know, they could get lucky this time, but we just swept below a big figure level that was located below 2 levels of sell side liquidity. We're almost at the EQ of our target. Price likes to build in like these lows right before you get to your target, and then it will come take them later on in the day. So yeah, I think we did the right move by getting out completely, and we had a nice trade today. Following the plan, following the system, took a continuation fair value gap. The real move for the day was obviously this yellow fair value gap outlined here. And around 6 o'clock Central Time, 7 o'clock in the morning, this kill zone, I guess, we went ahead and took buy side liquidity. It was very subtle. Let me pull this over so you can see it. Do you see how we just barely took that pre-equity open? And then we shit the bed. Here's a swing low. We've got a break in market structure that's pretty clear. This is sort of like a optimal trade entry. And in fact, if you put the OTE on here, I'm pretty sure our targets are going to line up pretty nicely. Let's do that real quick and see what it looks like. If you guys noticed, we made the right move taking our profits. Yesterday, I was just so caught up in a confirmation bias, and I just believe I was out of sync with the markets. It was it's super fucking painful. You know, this stream has been very difficult for me because normally I'd be waiting for lunchtime and I'd find the ability to recover losses or make extra profit during the lunch period, but you know, I'm not trying to have a 5-hour fucking stream every day. Yeah, so our original target's likely to get hit, and that's the EQ of the breaker, which lines up almost exactly. Remember that 661, 663 area with the EQ of the, excuse me, not the breaker, the daily bullish order block. That looks really good. You would think to short from here, and you could be right, but chances are, with the hourly candle coming up, we'll probably see something like this, right, where it makes like a double bottom, takes that, comes up into that order block, and then bam. If that's not the case, it'll just go right to the target, and we were only 20 pips away when we took our profits, so no big deal. All in all, it was a nice setup. It happened really close to equity open, which is always kind of scary, to be honest. I mean, you just never know what equity open's going to do. The pre-equity open moves are valid. It's in my system, it's in my plan. Obviously, the fair value gap model sets up pre-equity sometimes. So you could have taken this if you were awake for it. We start to stream. That's another thing about streaming. Like if I come to my charts around 7:15, 7:20, so I can see the 7:30 candle form. But the stream doesn't start till 8, and I can't take any trades until then. So even if I had saw this early on, which I did not today, I couldn't really take that trade while streaming. So it's just an added layer of difficulty. This is something we got to put up with. Typically, I would have passed the challenge by now. And as I mentioned in the previous streams, I've taken a couple challenges before, and I've always passed the first stage. And then for some reason, I just got so impatient and greedy and tried to rush. The last time I did it was in August, which is like the shittiest month of the year, which was just a fucking terrible idea. I got wrecked so hard, and I came within I went over by like $40 on slippage on the max loss for the day. So yeah, all in all, I would say doing this live streaming has helped me improve a little bit. It's also helped me go back and see that I have an impatience problem, and it's something I've been tracking in my daily journal. So yeah, I'm going to leave this running for a little bit so you guys can see us hit our target, or you can see the chop that happens after taking sell side. Although it looks like it could just run straight down from here. This price action looks pretty good for a rundown, like right in the next couple candles. Let's look at the hourly. Yeah, let's just straight down. That's great. Okay, so we're into this. Hope you can see this is kind of small. We're into this little, these are just successive busies, basically. Buy side imbalance, sell side inefficiencies. So we're into the lower portion, the lower third of the graded price swing, which would be from this swing low right here to this swing high. In fact, let me just throw this on the hourly. Hey, look at that. Final target's getting hit right now. Bam. So we had a re-entry opportunity, re-entry opportunity. Let's go to the hourly. Here's a swing low, swing high. We're gonna put a graded price swing on that. I like to use the Gann box for that, by the way, and just separate that into quarters. And so we still haven't reached the bottom quarter. And then within this parent price swing here, so we look at the lowest low of this price swing, the apex if you will, and you see you've got a mitigation block right here, the highest bodied candle in that swing that failed. And then you've got what looks like to be a breaker sitting right here with these successive blocks, which I expect to fail. So yeah, we could get like another 70 points or so of movement downwards potentially. That would also coincide with the EQ of this right here. And again, guys, I'm okay with getting out early, taking profits early. I'm totally fine with missing the rest of that. Y'all might not be, but that's just where I am in my development. And then on the 15-minute, we've created this SIBI here. 24 to 82. Yeah, it's like a 50-point gap area. Definitely not a fair value gap. If it's like 15 points, maybe 20 points, I'd call it a FVG. I think that's similar to the way ICT likes to grade his. And I'd be a liar if I wasn't feeling FOMO-y right now. if I said that. So I mean, I'll just be totally honest with you guys. And the way that I handle that after I've made my profit for the day or my target for the day is simply doing a demo trade. And I don't want to limit, I want to mark it because it's going to shit. So here's the top, the premium line of this fair value gap, this continuation fair value gap. We're going to go right above it, right about there. Ultimate TP, let's say it could get back down here. Actually, that's kind of off on RR, so let's just pull this down here. Yeah, there you go. Take that idea off since that's obviously not what happened. And then remember the 1663-ish, 61-ish, that's where the daily order block EQ is. And that order block was made up of 3 successive candles. Let's go take a look at that real quick. I'll pull all the busyness off the charts. Feels nice when you're on side for the day. So the EQ of this here, these 3 successive candles. Taken buy side up here. That was Thursday last week. So I guess we're just going to leave the, you know, another reason I had that confirmation bias to go up for at least another 100-something points was because we've just left this monthly SIBI. We've left the premium untouched, which seemed kind of weird to me. And right now we're actually tagging the discount line of that. So that's an interesting area to be in right here. I think what we could likely see over into the new year would be something like this. Right, come up and retest it. Bam. And then continue down, which is the obvious order flow here. And then if we use the 2020, whoops, sorry about that. If we use the 2020 event, the market flash crash, we can throw a GAN box on right there to right there. And you notice we've got all of these successive busies here, and the lower third or fourth, I guess, of the price swing has yet to be tapped. And then we've just got this big old juicy bullish order block that's been waiting forever to be tagged. So yeah, over the long term, continued downside is the most probable. And I suppose we're just going to leave this monthly SIBI premium line. We're just going to leave that alone, apparently. Also the daily SIBI here. Let me take some of this off because it's kind of busy. I'll take this guy off. So yeah, that's what we've got there. Let's go down to the weekly. Could just be returning to this. Excuse me. Could just be returning to this here. Four hours straight down. So remember we saw pre-equity, we saw this here. Let me pull this off here. Can you guys see this? We've got an IOFED. That's exactly what that was. This candle barely taps into this fair value gap on the 4 hour, excuse me, the SIBI on the 4 hour. And now we're just filling in the rest of this busy here. Probably make it down another 100 points or so. I'm not chasing price, okay? If this was a regular month, regular market conditions, I would have been stacking. I am absolutely not going to be doing that. Even though this hourly looks like it's just going to continue straight down. Right, obvious fair value gap here on the hourly as well. Probably come down here at least to the 600. I'm just going to let my demo trade do the work. Let's stay above the EQ of this. That puts us at almost a 2-to-1, which is nice. And here's a fair value gap entry, so let's put it right in the center of that. Okay. Yeah, that's it. I mean, I could have left a piece on, but I'm not trying to dick around in the middle of the week with no economic news drivers until Friday. It's just not my style. I like to get in and out, and that just is what it is. Right now in this breaker, which I'm almost positive is going to fail. Here's the highest body candle in this apex swing. These two guys right here, if you can see that. We can go ahead and draw that out. That's an hourly breaker. And that could even be the basis for you to continue short from here. You know, if it went something like this. Fill it in, it probably wick above it or some shit like it always does. And then right down to one of these order blocks. See, that's the order block right there. There's another order block right here, which is the most likely to get tagged. Right, that could be a trade idea for you right there on the day. Let's check our profits. About $30,000 in profit on our almost $300,000 account. I started this at 100K, and I've just been fucking around with demo trades. I mean, I haven't really been worried about following max loss rules or anything. It's just a demo. So yeah, guys, I'll let this run for a little bit. I'm gonna go take a quick break. You guys can just watch price or go do your own thing. It is what it is. Appreciate you sticking with me through yesterday's offside, out of sync terribleness. I'm not gonna lie, that really, I mean, I still get really fucking heated about things. The difference is I don't act on it anymore. I used to act on it and blow my account, and now I just have routines and plans and a system basically that I created, which anybody can create a system. It's super fucking easy, and you just plug whatever strategy works best for you in there. If you're a classical chart pattern guy, if you're support and resistance and all that garbage, but I like to stick with ICT. He's the best. And yeah, so that's about it for right now. I'll take a break. We'll come back and take a look at the markets, and Until then, you guys just hang out for a bit. Okay guys, I'm going to go ahead and end the stream here so y'all don't have to wait around forever. But I'm definitely not taking any more real trades today. And we'll just come back tomorrow and see what we can pull off. If there's a nice neat little setup in the AM session, that would be great. That would put us right back above our previous equity high. Let's pull the Ftmo window over here. I'll show you what we did today. So here's our losses from yesterday. We took a 2.8% loss, which is within our parameters. That's okay. And then I went ahead and sold a little bit early. We had about a 70 to 80 pips more movement that we could have, or points that we could have caught, and that definitely would have put us above our original highest equity point, if you will, which was 83.11, so $8,311. But we're so damn close to it, it's not really a big deal. I followed my rules, followed my plan, feeling good about that. And we should have some nice structure tomorrow to work with. And yeah, so we're about, let's say, what is this, 83.11, 76.49. We're about 0.6% away from our highest equity balance. And then we're only, looks like $23.51 or something, so $2,300 away from passing the challenge, which is like 2.3%. It's definitely doable within the time frame. Let's see exactly what that is. So, 7, 6, yeah, so we're about 2,300 away from passing the challenge. So we're still pretty close. Recovered the loss from yesterday. And yeah, that's about it. Thanks for joining me. I appreciate it. And we'll see you tomorrow morning.